All right, today we're going to do something really cool. We're going to take apart this absolutely incredible trade on Meta. We're going to peel back every single layer and see the exact strategy that led to a massive win. You'll see how this wasn't about luck at all, but about a disciplined process. So let's get right into it.
So first things first, let's just look at the result. A whopping 211% return. A number like that just makes you stop and ask, how on earth is that possible, right? Was it just a wild guess? A lucky roll of the dice? Well, as we're about to find out, it was something else entirely.
And to put that percentage into real-world terms, here it is in cold, hard cash. $12,771 in profit. That's a serious, tangible gain, and it all came from one single, beautifully executed options trade.
This quote, it really just hits the nail on the head. This whole explainer is built around this one idea. This wasn't about throwing a dart at a board. It was about seeing the things most people miss and then acting with total precision. This is the core theme we're going to keep coming back to.
Okay, so let's frame this up properly. We're going to treat this whole thing like a case study. We're going to break down the signals, the confirmation, and the execution, step by step, so we can really understand the mechanics of what made this trade work so well.
You know, every great trade starts with a clue. And in this situation, it wasn't some big, flashy, obvious sign. Nope, it was a combination of these subtle little signals that hinted at a major opportunity just waiting to happen. So let's look at the very first clues this trader picked up on.
The very first signal came from a pretty common technical indicator, the RSI. That's the Relative Strength Index. The trader spotted something called a bullish divergence. Now, this is a classic pattern for sure, but it is so incredibly easy to miss if you're not actively looking for it.
So what does that actually mean in plain English? Well, think about it like this. You've got the stock price, and it's hitting a new low. On the surface, that looks pretty bad, right? But if you look down at the RSI indicator, it's telling a totally different story. It's not making a new low. In fact, it's making a higher low. And that mismatch, that's the divergence. It's like this little secret signal that the selling pressure is actually running out of steam. It's the first crack in the foundation of that downward trend.
But listen, one signal on its own is rarely enough to bet on. So the trader looked for confirmation from another indicator, the MACD. And what do you know? They found a perfectly complementary pattern, a higher low right there on the MACD histogram.
Now, what's so cool about this is how it backs up that first signal. The MACD showing a higher low is also suggesting that the selling momentum is fading away. So now you've got two separate, powerful indicators whispering the exact same thing in your ear. Hey, this trend might just be about to turn around. That's a powerful 1-2 punch.
Okay, so we've got two initial signals. But signals on their own are just hints. They're not a guarantee. The next phase, and this is absolutely crucial, is all about confirmation. It's about patiently waiting for the market to prove your theory right.
This right here, this lays out the full three-step process, and it just shows incredible discipline. Look at the logic. Step 1 is seeing that internal weakness, right, in the indicators. Step 2, that unusual volume spike. That's your external validation, a sign that maybe other big players are seeing the same thing. And step 3, the break of resistance? Well, that's the market giving you its final permission slip. It's the definitive sign to go.
And that permission slip came at $690. This wasn't just some random number, it was a known resistance level, a spot on the chart where sellers had shown up before. So breaking above it was the market basically screaming, the bulls are in charge now. That was the big green light to finally enter the trade.
So the signals were there, the confirmation came through. Now for the part that really separates the pros from the amateurs, the execution. How do you actually manage to trade once you're in, all the way to the exit?
So the entry timing was perfect, but just look at that exit plan. This is where so many traders stumble. They had a predefined target at $745, just shy of the next major resistance level. Getting out there isn't about leaving money on the table. It's about executing your plan with absolute precision and avoiding the kind of greed that can turn a great winning trade into a painful losing one.
So when you put all of these pieces together, the signals, the confirmation, the disciplined execution, you start to see that it wasn't just a series of random steps. It was a core philosophy playing out in real time. And you know, what this all really boils down to is a tale of two different mindsets. You've got guesswork over on one side. That's all about luck, emotion, just hoping things go your way. It's reactive. But then you have strategy, and that is a completely different game. It's about building a solid case, piece by piece, using actual data, and then having the discipline to act on it. It's the difference between gambling and taking a calculated risk.
And this final quote, it just says it all, doesn't it? The goal isn't to be right 100% of the time, because that's impossible. The goal is to develop a process that over the long haul consistently stacks the probabilities in your favor. That is the real foundation of success.
Which really leaves us with a critical question to think about. We've seen exactly how layering these signals, getting that confirmation, and sticking to a disciplined execution plan led to this massive win. So, is this kind of multi-layered strategic thinking the true antidote to all the guesswork out there in the markets?